Hello and good afternoon, everybody. My name is Magnus Heystek on behalf of Renters Wealth. Very welcome to our webinar this afternoon, which is a very serious topic of conversation. I personally would have liked to have been discussing the rugby and our prospects over the weekend and maybe the finals the next weekend, but we'll have to wait with that. So we'll talk rugby and good things later. But we're talking about how to protect your finances against state failure. And I'd like to welcome everybody. And we've had a record entry. More than 1,000 people have registered for this webinar. And we have a very impressive lineup of speakers. We have three very, very smart people. Elize Kruger, who's an independent economist from Carpe Diem. And she was also a collaborator with Mike Schussler, who used to be the consulting economist to Renters Wealth. So she's on the show. She's going to be giving us an outline on the SA economy. Russell Lamberti, very well-known economist who joined SALCA Liga, the Afrikaans Business Lobby Group, a while ago. He released a report about a month ago about the dire states of South Africa's finance, and he will elaborate on that. And then lastly, we have Claude Baissac, he's in France at the moment. He's a French, Mauritian, South African, and I think he's watching some rugby. He's going to be talking, he's a developmental economist from Unomics, and he has some very strong views on the trend that South Africa finds itself in. But I just want to, and he's going to be asking the question, is South Africa failing? Now, of course, that's a very contentious question to ask, and it's a very contentious discussion to be having. And many people are having this discussion. Some people outright say South Africa is failing. Other people outright saying it's not failing. One person who kind of shocked me a little bit a while ago was David Onsara, who's the relatively newish chief executive officer of the Free Market Foundation. Now, the Free Market Foundation is a liberal pressure group, think tank, research house, which has been in existence for many, many years. It used to be run by Leon Lowe. He's no longer there. But David held a speech at the Rand Club not so long ago, and he was basically saying parts of South Africa, very important parts of South Africa, are failing. And you need each and every South African investor, business person, business owner needs to take certain practical steps to make yourself state-proof. Now, that article appeared on Politics Web, it appeared on BizNews, and it actually went viral because some of the stuff that David was saying, and it's a very cold, calculated research document and speech that he wrote, he said, things are not going well. South Africans need to take note of this and that you need to take steps to state-proof yourself. Some of the ways was to pay as little tax as possible, legally, of course. He also made some references to the kind of investments that you make. And also, lo and behold, there he was saying, if you are a business person, set up a structure in Mauritius and get a holding structure there, which will, to a certain extent, state-proof your business. Now, that had caught the attention of a lot of people wanting to ask, how can you do that? So we're going to be looking at the South African economy. We're going to be looking at how to state-proof yourself. But let's go back in time. For those Renters clients who have been with us for 10 years or longer will know that 10 years ago, we started noticing certain trends in the investment markets that started recommending that we should be looking offshore for our South African clients. Now, at first, it was not a major shift. It was just a gradual reallocation of assets. But over time, that advice became stronger and stronger to such an extent that for many people, our advisors, you should be taking all of your discretionary long-term capital offshore. And as a result of that, it was not very popular with the local fund management companies. And also the Financial Mail had an article calling me Dr. Doom, et cetera, et cetera. But let's see how valid and how accurate was that advice over a 10-year period of time. Here is a chart, and all of this will be recorded, and you will get it later on. It's a very simple chart. It compares the annual growth of Allan Gray Equity Fund, which is South Africa's largest equity fund, with the three benchmarks that we tend to follow, the MSCI World, the NASDAQ, S&P 500. And you can see for yourself over a 10-year period, growth of 8%, which is quite good for the South African market. But it doesn't come close to the returns that you could have got with your investments elsewhere, whether the MSCI World, Nasdaq, S&P 500. So it's 8% versus 15 versus 19 versus 25% per annum over 10 years. Likewise, the same over 5 years. So there's been a massive outperformance of the South African market by the rest of the world, or to put it the other way around, we've been underperforming the world in a very, very substantial manner. And I don't think a lot of people are aware of this. I think the local fund management industry does its best to conceal these kind of comparisons. But I think it's very important that people look at it. Let's just take a combination of funds. I took the top 5 equity funds in South Africa, did a weighted average for the 5 funds, and the average return on these top 5 funds over 10 years was 6.5%. That's before costs. So if you deduct costs, another percent, what? People have only been making 5% per annum on average in South African equity market, compared to the benchmark, the S&P 500, of almost 3 times that. Ladies and gentlemen, over time, such an underperformance does have consequences, and we're seeing a lot of people experiencing that consequences in the sense that the capital has not grown. It has not grown in dollar terms, something that we feel very strongly about. A bigger disaster area was, of course, the listed property. I mean, our big buildings, our Sandton cities and Menlyn shopping centers and all the growth points in Hyde Park. It shocks people when I show them this chart that the value of SA listed property in rand terms has declined by about 30 to 40%. And compared to inflation, you're about 50% worse off. And this applies to anybody who owns property, whether it's listed property or residential property. That has been a disaster area in terms of investments. And it's a major investment sector that's been damaged by the ANC's bad management of the economy, taxes, bad management of municipalities, etc. One can have an entire lecture just on this. But the outcome is anybody who invested in listed property, unlisted property, residential property, with the exception of maybe certain pockets in the Western Cape, have become increasingly poorer as a result of this. Here are some articles that we started picking up. The mainstream media for many, many years totally ignored any kind of negative reporting on the JSE, on the SA economy. But my apologies, but you simply cannot ignore the reality anymore. Only this week was there this article in the netwerk 24. I tried to translate this, but wasn't possible. So for the Sakaliga people, I put the Afrikaans version on. And it basically says that the JSE had 600 listed companies in the year 2000, and today it's got less than 300 and losing about 25 companies per year. And that is a major concern to a lot of investors. And you should be concerning because it limits your choice of funds or sectors or ways to create money. 2018, I wrote an article about people who do not believe in offshore investing, and I call them the Bitterreinders. They are going to get poor. And they are getting poor because if you reprice South African assets in dollars, it shows that for the last 5 to 10 years, South African investors who did not have some degree of offshore exposure have become progressively much poorer. They see it when they go to France to go and watch the Rugby World Cup. Their rands buy so much less than 5 or 10 years ago for 2 reasons. The currency has dropped and their investments have not grown. So that is a message that we've been trying to get through to our clients for many years. And fortunately, most of our clients have bought into this way of thinking about investments. Here is just a very, very complicated and busy chart. It basically shows how foreigners are selling South African assets. And over the last 5 years, you won't see it in this chart, but there's about R1 trillion that has left the JSE and our bond market. And maybe Russell can talk about that, or even Elize Kruger. What does it mean? In other words, the foreigners are selling the bonds, South Africans are buying the bonds, and it's creating all kinds of distortions in that market. Only last week or a week ago, we had suddenly we had the news that the government is running out of money, and we had, for instance, Stan Lib's Victor Mpafuli, who runs the biggest income and bond fund in the country, he was talking very clearly, very directly about the apocalypse for the South African economy over debt if government carries on spending the way it's spending, because revenues are collapsing, the substantial budget undershoots on the revenue side, yet government has no plans to stop spending, and we even heard today they're going ahead with a basic income grant, national health insurance, etc. So there's a bubble starting to develop in terms of our debt. When does this become a problem? Where will the problems come from? And what does it mean for each and every investor listening to the show? And there we have it. Sunday Times about a month ago, September the 3rd, front page article basically saying state has run out of money. So there's a lot of panic about our finances. We'll see in the medium-term budget quite soon, 1st of November, how bad it is. Is it the precursor to a debt crisis or a fiscal crisis or a fiscal swamp, depending on who you talk to, and what you again can do about to protect your own personal wealth. And this is what the webinar is all about. And at the end of my talk, we'll come to certain conclusions. I just want to end off about the continuous barrage of positive and bullish pronouncements by the local fund managers as they underperform and as money flows out. They keep on punting South Africa or the JSE has been cheap and now's the time to buy. Well, here's a forecast by Old Mutual in 2018. And they basically said, South Africa is the place to be. We will beat most of the world. And lo and behold, of course, 5 years later, we're probably the worst market in the world. So I think it's very dangerous for fund managers to be making these kind of pronouncements because it influences people, it influences financial advisors, people make their investments. And 5 years later, when they've had no growth, Old Mutual and those kind of companies are very quiet, don't say a word. And even last week, there was another fund manager from the old Prudential, M&G, again, saying best investment going forward is South African assets, cheap, safe, and all that. Well, we disagree. And I think many other people would disagree. They're trying to protect their businesses, but we are concerned about the outcome to investors when it comes to giving financial advice. So I'm going to end there, ladies and gentlemen. I've spoken about property, I've spoken about the stock market, and at the end I will summarize what can be done by private investors to protect themselves, get themselves off the grid. And it's quite easy. You just need the right kind of advice. So without much ado, I'm going to hand you over to Elize Kruger. She will be giving an update on the economy right now, followed by Russell Lamberti, and then we will speak to Claude Baissac from France a little bit later. And then, of course, you can start sending your questions, and we will try and answer them as best we can. So thank you very much to our guests giving up their time to do the research and the presentation. And I'm going to say goodbye until later.
Okay. Good afternoon, ladies and gentlemen. I hope that everyone could hear me. If not, please indicate. Thank you very much for the opportunity to talk to you on my views about the economy. For Brentis Wealth to create this opportunity. Thank you very much. I want to start off with looking at a long-term graph on the South African economic growth compared to the global economy's performance and also compared to our emerging market peers. Now, if you look at this graph since 1993, you can see that there was a clear positive correlation between South Africa's economic growth performance and the global economic growth up until about 2008. At the time of the global financial crisis. And I mean, mainly the reason being for this, as we all know, we are commodity exporters. So if the global economy is doing well, there's more demand for our commodities and we tend to follow what's happening globally. Up until that point of the global financial crisis, we started then to underperform. So if you compare the blue line here compared to the orange, South Africa started to lag. And that underperformance has actually now continued for about 15 years and counting. And if we now really look at
Elize,
what was, sorry?
Elize, sorry to bother you. I think you're sharing the wrong screen. We can see the screen with the slide preparation coming through. I think you probably intended to share the full screen slides. It might just be a different screen that you have to choose in the screen share.
Okay, just give me a second then. I'm here on normal. I wonder if I could just put that one out of the way.
That's still the other one. So we can still see that. I think you might have to move your screen share onto the alternative. I don't think it's there that necessarily the issue is. It's choosing a different screen. But anyway, let me not derail it. I just thought I'd let you know that that's.
Yes, but I would appreciate it rather.
You can still see the slides, so it's could work.
But do you see my front cover slide now? Do you see both slides?
We'll see both slides.
I wonder if I could get this one to disappear. So I'm a bit.
It's possible that you could choose one of those options.
High presentation view. Is that better?
Yeah,
there we go.
Okay, good. Yeah, now I can. Okay, so just to get back to my story, so I wanted to point out the underperformance of the South African economy since 29 onwards. And if you look at the timing, it also coincides with the former President Zuma's tenure that started in 29. And it's also the heyday of state capture and state-owned enterprises decay. I mean, that was actually most prominent in that time period. And if you look at the forecast, and I just show here the forecast of the IMF, that underperformance is clearly forecast to continue. So we have lagged behind our peers. On top of that, we have also, as a South African economy, not keep up with our population growth. Now, in the most recent, last week or so, we've had the census results coming out, census done in 2022. And what we have basically got confirmation of, and we've known this for a long time, but some new data suggesting that population growth is way above our economic growth. So between 2011 and 2022, the population growth was 19.8%. That culminates into an average per annum of 1.8%. And if you compare that to our average economic growth in the same time period of only 1%, that is clear that we are not keeping up. The economy is just clearly not keeping up with the population growth. So as a result of that, all South Africans are becoming poorer. And so on these graphs, I indicate to you the real GDP per capita. In the top graph, it's the percentage change on an annual basis. And you can see really in the last, say 6 of the past 10 years, we've had negative growth in our GDP per capita. And just since COVID, we've had sort of 2 positive numbers. But if you look at the level, which is depicted in the bottom graph, our level of GDP per capita is now back at 2006 level. So all the years in between, you can almost say it's lost opportunity, as we are back in terms of your portion of GDP, same as in 26. So a growing number of people sharing a shrinking pie. And, that is just basically a recipe for shrinking prosperity. So it's no surprise that we thus, saw a significant increase in our official unemployment rate. I've taken the same 2 years as a comparative time period. So our official unemployment rate was 24.8% in 2011. That has shot up to 33.5% in 2022. Most recent data point in Q2 of this year is slightly lower at 32.6. So, and also that's no surprise that we've got increasing state dependency. And, in this little table, I just also show you a snapshot FY11 compared to FY23. On social grants at that time period, we had 14.6 million people receiving grants. That has now shot up in FY23 to 18.6. That's the last the budget data that's actual. On top of that, as you know, in COVID time, the SRD, the social relief of distress grant, was introduced, and that is still with us. That is another 8 million people receiving that. So the total people receiving grants now is at 26.6 million, which is actually 43.3% of our population if we take the most recent census numbers. And no surprise that the cost of the fiscus has also blew out. In the most recent budget numbers, 233 billion that was spent for both social and SRD grants together. So yes, that really is a trouble. And if you look at the composition of the population, and this is now data that's freshly from the census that showed that South Africa's population is quite young. Our median age is 28 years. You can see the profile of our population with a lot less, older people, quite the opposite to what the developed world is experiencing in a sense. But yes, what I think I wanted to point out specifically by looking at the different age categories of our unemployment rate is if you look at the total unemployment, 7.9 million without work. If you look at the bracket of youngsters 15 to 24 years old, that unemployment rate in second quarter this year was standing at 60.7%. If you take the next bracket, also young adults 25 to 34, the unemployment rate is almost 40%. And if you add the two together in terms of the number of people in that age bracket, you talk about 60% of our economic actively people that is at home, not working. If you then look at this pie chart, which is quite a scary one, if you look at the proportion of the unemployed by education level, you can see that 50% of the unemployed people has got less than matric, and 40%'s got only matric. So you talk about 90% of the unemployed people in South Africa has got very low education levels. So these millions of people are sitting at home without an opportunity to work and without education to enable them to work. And I think this is really a big red light for South Africa in the sense that this is where you're going to see, more social unrest, where you're going to see crime and corruption continuing. Because if we do not address this scenario, this social issue, it's going to be just going further south for the South African economy. So it is no surprise that if you look at that background, that we've seen confidence levels remaining depressed in the South African economy. Both household confidence levels and also business confidence levels are at low levels compared to the past. This is the Bureau of Economic Research indice data on the left-hand side. And then also no surprise that foreigners and non-resident resident investors are also not positive about South Africa. I mean, this is the data that I think alludes to what Magnus has just shown in his busy slide just now, cumulative portfolio flows over the past couple of years. And what actually struck me, except for looking at 2023's numbers here, is that if you look at this a bit longer term, it's actually for the past 6 years at least, where we've ended deep into negative territory on a cumulative basis by the end of the year. It was really last in 2017 where we had a slight positive in terms of cumulative portfolio flows being positive. So really indicative of how foreigners have now also, changed their views about South Africa and being more negative. And also no surprise that we are thus moving backwards. If you look at different metrics, sovereign credit ratings moved into negative territory, a long time ago, and we've seen multiple cuts since then. We're actually now lower compared to where we started in 1994, when the ratings agencies started to look at South Africa for the first time and rated us. So we're below those levels. As you all know, in Feb 23 now, we've been added to the Financial Action Task Force grey list, given that we have not kept up our policy on what's needed to safeguard capital flows into this country. If you look at the world competitive rankings, we've also slipped. Just the most recent survey, South Africa is ranked 61 out of 64 countries. And if you just take a step back to 2019 pre-COVID, we were at the 56 sort of level or position. So we've moved backward there as well. So yes, what is the core problem? Now, government's ideology of dominance in the economy with dismal results. If that was the ideology and it could result in good growth for the economy, we would have thought about it differently. But if you look at the history of ANC government, we've seen that the dominance in the economy has just literally give us very little results. Just two snapshots looking at electricity on the one side. This graph was included in the Monetary Policy Review a day or two ago, showing us the cumulative load shedding in 2023 already exceeded 2022's levels in May this year. You can see that significant sharp upward trend in the red line compared to last year, the blue line. Can you just imagine if we had all those gigawatt hours of electricity and we could use that in a productive capacity for the economy? We would have looked at quite a bit of a different story. On the right-hand side, structural constraints, specifically your red line, total cargo handled at SA ports. You could have added a graph there on the rail freight scenario as well, very similar. Your electricity produced, can see how that numbers dropped down since early 2021. Despite that, the economy did grow a tiny bit, as indicated by that green line, showing that there's some resilience still coming through. But our structural constraints, specifically relating to transport and logistics and electricity, have kept us back, and especially in this time period that we look at. So really this culminates into, I would say all the problems culminate into this one specific significant problem, and that is our unsustainable fiscal situation. We are currently in a vicious cycle. We've got low economic growth, and our economic growth has been low for the past 10 years. That resulted in high unemployment, as I've just indicated, growing state dependency, and also lower tax receipt. Now, so if the economy is not growing, obviously your tax revenue also is negatively impacted. So that results in a growing budget deficit, and then that needs to be financed. So that means increasing debt levels. On that front, looking at high interest rates, higher bond yields, so your rising interest cost becomes a problem as it crowds out your capital expenditure. And then you end up in an economy where infrastructure is not maintained, where you continue to muddle along, not growing, not maintaining, not adding productive capacity to the economy. And then you're back into low economic growth, and you just can't seem to get out of that cycle unless there is a significant change in the way the economy is managed. The right-hand side is just to reflect exactly that, how total revenue dropped, especially 28, 29, just at the time when the economy started underperforming is when we saw that level down on the revenue. And you can see how that gap has just continued and growing, specifically in COVID. So COVID hit South Africa particularly hard. So you can see how that gap opened up in 2020, 21, and we have not managed to get that closer anyhow. But that is what Russell will discuss further into detail. That was just to bring it back to how the low economic growth is impacting on our unsustainable fiscal situation. So yes, if you had to take a dipstick and you had to say, so what is the status of the economy? And now looking at, as we like to call it, SA Inc., what is the share price of SA Inc., what's happening here? Really your two big metrics that can give you an answer to that question, independent of just your views. Basically the market's telling you what's happening, is indeed the rand exchange rate depreciation that we've seen, specifically pronounced since 2021. And I've chose to not share my own view on the rand exchange rate, as how that is. Every economist has got different views, and one hand and another hand and a third view as well. So yes, this is Reserve Bank's view, okay, indicated just yesterday, a day or two ago in the Monetary Policy Review. You can see how they've also upped their forecast for the rand to stay weaker for longer, between March and September, as the two dates that's indicated there. So the rand is weak, and it's expected to remain there. Why? Because we have some issues that are not sorted out, and that is placing pressure on capital flows and on the prospects for the economy. Also very clear in the government bond yield. If you look at the yield curve, just maybe look at the green line, January early this year, what was expected on long-term interest rates, and see how that has actually increased to the blue line here. Significant more risk that is being built into our bond yields, given the state of our government finances. I mean, if you actually think about our short-term interest rate cycle, we are very close to the upper turning point on short rates, so then you should have expected your yield curve to look quite a bit different to what we are looking at now. So it really indicates that there's a lot of risk that has been added to the current bond yields as we see them. So yes, quite a dismal story. I'm afraid you're going to all be in depression by the end of today's discussion. But so the question is really, is there hope? And I want to answer that by alluding to the following. Government has started to unleash the private sector. Now, on the electricity generation side, but also recently on transport and logistics, more sectors need to follow, but that is indeed a positive development that gives me hope. And if you look at the bottom three little charts here, all related to our electricity generation space, you can see how the private sector started to react and started to fill the gap that's been opened up by removing of regulation rather by government. So the left-hand side there, you can see that our licensing threshold was removed in, say, Q4 22. And look at the huge reaction that we've seen in self-generation capacity registered with NERSA the very next quarter. Embedded generation projects, you can see the line up there. And if you look at installed rooftop solar, we've seen a significant growth. So if you do give the private sector opportunity, I think we will see that there will be a difference, and there's a positive outcome that is that we can look forward to. The resilience of the South African business sector. I mean, we've had so many troubles to deal with, and still businesses carry on, continue to do what they do, make new plans. The commitment of our private sector to work alongside government, that is, in my view, a big positive for South Africa. We still have hope as long as we can get the private sector to work with government and to collaborate to get us out of this dismal place. The entrepreneurial spirit of the nation, we still see new businesses popping up, solving new problems, solving old problems in a new way. That is one of South Africa's, I would say, big plus points, that we've always get our heads around what's happening and make a new plan. Pockets of excellence, particularly in our financial sector, tertiary education, medical fields, tourism. And if you think about, South African skills that are applied globally, I mean, our doctors are in how many countries in the world, our CAs. Yes, we have lost them because we're not generating enough opportunities for youngsters specifically to stay in our economy to work here. But we can see how, all those people have been trained here in universities that are state sponsored or partly state sponsored. So I think we should also not remember to also watch out for the pockets of excellence. But politics remain key, and where we are sitting now, we are just really in front of the 2024 election here, and the question will always be: is there political will to take us from this bad place where we are currently, this muddle along economy that's just really going nowhere, to get us out of this rut? We will have to have, political will, and we will have to see the private sector becoming more dominant in the economy. So that is my part. I'm going to give over to Russell, I think.
Thank you very much, Elize. I am assuming that you can see my screen. Thank you very much, everyone. It's a great pleasure to be here. I'm going to be talking about South Africa's fiscal mismanagement and the risks that presents. I think this session can descend into a big doom and gloom session, and I think we need to be very realistic about what the challenges are, and realistic about where optimism is warranted and where it is not warranted. For example, if we win the World Cup, that's not going to turn the country around. That would be unwarranted optimism. We could still hope that we win the World Cup, but that's not going to fix SA. So we've got to be placing our attention and our efforts into the right sort of areas. We've got to be hedging ourselves appropriately, and I want to get into some of those themes today. It's not a very complicated presentation in terms of slides. I've got a few slides to show. Let me just skip through here. Okay, so first chart is a big picture of the expenditure and revenue of the South African government. And the axes that you're looking at there is as a percentage of GDP. So how much revenue do we collect as a percentage of GDP, and how much do we spend as a percentage of GDP? So you can see what in my opinion, and economists will differ on this, was diabolical fiscal management through the COVID crisis. We had an absolute huge drawdown in tax receipts, of the order of 4% of GDP or so, and actually probably worse in the peak of it. And yet we ramped up spending. So we ran absolutely enormous deficits that saddled huge additional debts onto the government. And you can see during the Mbeki era and the Trevor Manuel and so on, we brought those deficits right down. We were balancing the budget, give or take, for a couple of years. It blew out in the financial crisis and never really came back. Ironically, through the course of the Zuma years, we actually ate into that deficit somewhat, but really over the last number of years and through that COVID era, what's particularly disconcerting is that in the last few months, or let's just say for 2023 so far, the tax intake has started to roll over again. So we got this huge decline in tax receipts. There was a big recovery as everything came out of the COVID lockdowns and so on. And that's starting to roll over again. It looks like South Africa has sort of reached its kind of peak taxation capacity. It's very difficult in South Africa to tax more than about 25% of GDP. When you start trying to go above that and raising tax rates and so on, you typically get less compliance, you get more avoidance and evasion and so on. The economy in South Africa, the societal structure generally struggles to sustain anything more than 25% of GDP. At the same time, you've seen a real acceleration in the trend of spending. If you just take the COVID spike away, you can still see that in the Ramaphosa era, there's been a substantial acceleration in the trend of spending. You could even argue, give or take, that the Zuma years, were kind of flat on expenditure to GDP, really has now ramped up. So we're running significant deficits. And I think the big thing that this tells you is that we have not a revenue problem, but a spending problem. Every time the budget rolls around, people say, well, there's not enough revenue and what can we do on taxes and so on. We do not have a revenue problem. South Africa, inflation adjusted, we're receiving more tax revenues than we were pre-COVID. Tax revenues, inflation adjusted, are up by 50% since 2008. So government is actually very well funded. For an emerging market, we have very high tax compliance. We have a SARS that functions pretty well. I mean, it's gone through its wobbles over the years, but essentially we can collect lots of tax in this country and do. The obvious problem is on the spending side. And you can see a kind of spending situation that's really imprudent and to some extent kind of getting out of control. Now, we need to just temper our expectations of how bad things are, because these big trends tend to work quite slowly, and we shouldn't necessarily over panic, but there is a big spending problem, and tax revenues are kind of maxing out at that give or take 25% of GDP kind of level. So what I'm showing you here is pretty much the same picture, except instead of looking at as a percentage of GDP, we're looking at just rands, billions of rands. So when you look at 2,000 billion rand, you're essentially looking at 2 trillion rand. Expenditure in blue, revenue in yellow, and those dotted lines are the trends that prevailed between 2009 and 2019, which is that that period that was bookended by the financial crisis and the COVID crisis, as it were. So that's what we got. Now, you can see that both lines have moved somewhat below trend, but the blue line is much closer to its trend. In other words, that sort of fairly aggressive level of spending that South Africa's undergone since 2010 or so, or 2009. It's the yellow line that's starting to move in quite a different direction from that trend line. Every time you go up a line on this chart, you're increasing by about 25%. It's a log chart, which just gives you a nice way to compare where you are, compare back to history and so on. And you can see that aside from the COVID spike or dip in revenue, that we are currently running one of the largest deficits that we have over this whole period. So that's just another way of kind of looking at it. And this takes those two charts and minuses the one from the other, so you can actually see what is in fact the rand difference between these two charts. And that's what the picture looks like. At the moment, we are running about, on an annualized basis, about a 400 billion rand deficit. On top of this huge debt pile that we already have, we're adding to it by about 100 billion rand per quarter. So just very irresponsible fiscal management. Everyone knows that you can't do this forever. And you know, some of the cautionary tales in other emerging markets throughout history are there for all to see. This cannot go on forever. And the question is, what is going to cause that yellow highlighted gap there to go back up towards, much closer towards that zero line of the difference between surplus and deficit, a balanced budget? Now, of course, this is not only a South African problem. And I think the one thing we need to temper ourselves with here today is it's not a land of milk and honey overseas. It's not like you're sending money to the United States and it's this calm, peaceful, thriving place. There's political turmoil there. Bond markets are under real pressure there. Stock markets and the dollar have performed well over the last 10, maybe even 15 years, all things considered. But then you got to say, gee, that's been a very long run. And we've got to ask really, smart questions about how long that can sustain. And if you look at United States' fiscal situation, it's also not looking very good at all. They've had a very similar big rebound in tax receipts from the bottom of the COVID crisis, the lockdowns, and it's recovered, but it's starting to roll over again. Tax receipts are not so good there. Spending is rampant. So governments globally are facing real debt constraints. Bond markets are under significant pressure. There's geopolitical risks in the world, that the world is facing in a way that South Africa doesn't always face. We're far down south. We're out of the way of those things, but then those things do create some sort of fiscal and financial risks for us. So we need to just take a kind of holistic picture here, but it's important for everyone to see how bad the COVID lockdown deficits were. They really saddled us with a lot more debt. There's been this recovery and now back down into nearly 500 billion rand annual deficits that we're adding to the debt pile. That becomes the burden, the future burden of all the taxpayers and of everyone else, just to try and sustain this big kind of machinery of state. Okay, so what are some of the key features of this? Government is borrowing roughly 100 billion rand a quarter currently. That is a lot of money. If you think about the daily amount or weekly amount of bonds that government has to issue, who is going to absorb that? Elize showed foreigners on the whole selling South African assets, not necessarily dumping South African bonds in mass. South African bonds offer fairly attractive yield. So some foreigners, like that. But at the end of the day, you're emitting these bonds. The supply of bonds is growing by 100, billion rand a quarter, roughly. And so someone's got to absorb that paper. Someone's got to absorb that debt. Someone's got to lend 100 billion rand every quarter to the South African government. And if they don't, and the South African government wants to continue borrowing that amount, it's going to have to pay much higher interest rates to secure that funding. And that's how these markets work. The big debt pile that's building up, of course, has an interest cost implication. And of course, as interest rates go up and government has to reissue new bonds at higher interest rates, we're seeing the interest bill rising for about a good 15 years at least. The South African Treasury was mostly able to reissue debt at lower interest rates because they had issued debt at such high interest rates in the 90s. The 90s was a very high interest rate period. And so when it came to reissuing debt through the course of the 2000s, it was issuing at a much lower rate. So South Africa's interest bill was really kept under wraps for a long time. Even since 2010, as we've ramped up the national debt, there was that dividend, that benefit of being able to refinance at much lower rates than in the 1990s. That's largely behind us. And we're now having to reissue, more and more debt, an increasing huge, large debt pile, roll that over at increasingly higher interest rates. So the interest bill is going up. It's not quite at 100 billion rand a quarter yet, but by the end of this year into next year, it's going to be sitting at that sort of level. So in essence, and I mean, this is sort of how the sums work out right now, we're basically borrowing our interest bill. We're borrowing to pay interest. Now, governments have more leeway than households because they can pull all sorts of tricks and they can play with taxes and shift lots of spending around, and even in some instances finance themselves through the central bank, through the printing of money, which is not advisable. But governments can play with all sorts of variables. But in essence, South Africa is finding itself, at least for now, in a situation where we are basically having to borrow to foot this interest bill. At least that's the way you can sort of think about this. And that's not a healthy place to be. So as I said, we've got a spending problem. We certainly don't have a tax problem. And as we come up to budget time and the mini budget, and then when we get to the budget time in February or so, I really encourage you to think very skeptically when someone is on the TV telling you that we have a taxation and problem and not a spending problem. It is absolutely nonsensical. We have a spending problem. We receive significant amounts of taxes. This is a very high tax country, actually. And for an emerging market of this level of development, South Africa is the envy of many emerging market governments in its ability to rake in all sorts of taxes. Importantly, South African bonds are becoming less trustworthy. That doesn't mean they're in an imminent crisis. It doesn't even mean that South Africa is imminently about to default, but there is increasing concerns about South Africa's ability to service its debt in the long term. Will government bonds in the long term protect you against inflation? Especially, that's a question people are asking as global inflation has gone higher over the last couple of years. Global bonds, I said, US bonds are also selling off, interest rates are rising. So globally, there's a bit of a bond market kind of, not panic necessarily, but certainly a bear market, certainly a sell-off. And so that's hurting South African government bonds. We face a very uncertain election next year. Bond markets are closely linked to the political structure of a country, and to the extent that that's less certain than it's probably been since 1994, just given the fact that it's possible that the ANC goes below 50, and that creates all sorts of uncertain political dynamics. That's got bond investors concerned. Okay, so and you can see that's exactly what's been happening. So our bond yields are currently at a level now that they're higher. The 10-year bond yield is higher than it was at the where it peaked in that lockdown sort of bond market crisis, where it peaked in that 2015 into 2016 kind of Nene-gate sort of crisis, and even where it peaked in 2008. So markets are concerned about South African bonds. Okay, so let's quickly look at what this means. What are we trying to say about all this? We think that there's three at least three. There could be many more, but I'm going to focus on three key risks of this fiscal situation. Number one is currency and banking system risks. Now, the Rand is always very tough to predict, and I'm not making short-term predictions on the Rand. Elize spoke about the Rand. She said the Reserve Bank expects it to be weaker for longer. It's very difficult for a currency to strengthen under these sorts of conditions, not just the fiscal conditions, but the load shedding, the overregulation, the poor growth. That's going to always be hard. We must also be mindful that the bond markets are very important to the banking system. The banks hold a lot of bonds as collateral. When bond markets sell off, when yields go up, bond prices are falling, banks actually face risks to their capital. And that puts banks under significant strain. That very acute bond market sell-off that we saw during the lockdown in the COVID time put the banks under enormous strain and actually caused the central bank to step in and have to stabilize the South African banking system. So the fiscal situation, the government fiscus, the solvency, as it were, and the financial soundness or unsoundness of the government has a direct impact on the banks, not just through that mechanism. As I said, the banks hold bonds as assets, so that's where they're vulnerable, but also because government is a huge player in the economy. Overall, public procurement is about 1.2 trillion rands worth of revenue every year in the economy. Government is a big buyer, it's a big payer of salaries, and of course, all this has significant impact on the economy, but also the banks who kind of mediate this whole process. So there is a currency and banking system risk that we have to take account of. State failure risks, running out of money, as it were, departments becoming financially cash strapped, all plays into this idea of state failure, the inability of the state to actually deliver where it matters, where it's supposed to, where it's mandated to. And of course, one of the risks that we face here is that as things get tighter and tighter, the state, various levels of government choose instead to funnel their money towards people, towards personnel, towards the payroll, social grants, a big state payroll, and you potentially see a diminishing of money spent on maintenance and on actually delivering what has to be delivered. And so you end up with a big bloated state payroll that pretty much doesn't do anything meaningful. So it very much plays into the state failure narrative. And then policy risks. And I think this is very important, and I'm coming to an end soon. Policy risks is key. The more cash strapped a government gets, the more financially vulnerable a state becomes, the more it's prone to using various regulatory and legislative mechanisms to try and kind of grab resources to keep funding itself. The state, and we know that the South African state is extremely corrupt. We know it's inefficient. These are not revelations. These have come out in commissions of inquiry, and this is common knowledge. When you're running a big state system like that, huge social grants, big payroll, corrupt practices, tender irregularities, all this kind of thing, that's a very big patronage system to have to manage. And when tax receipts are struggling, and the fiscal situation is becoming more precarious and government is having to refinance at higher rates, it tends to seek other ways to grab a hold of resources. And we are seeing this. We are seeing several policies that are very poorly thought out, very harmful in their potential effects, being proffered by the government, whether it's the Employment Equity Amendment Act, whether it's all kinds of draconian BEE, additional BEE requirements coming into numerous sectors, whether it's it's all sorts of things. It's the talk of the national health insurance, again, which would be another huge way for government to grab a hold of a lot of resources. So policy risks, we need to watch out for an intensification of bad policy from the ANC. Now, this all sounds very gloomy, and in some sense it just is, and we have to just accept that. But in another sense, we have to say, well, do we have a plan? Now, I'm not going to spend a whole lot of time talking about our plan. This is not a fragility platform. But I just want to say that what's very important here, and I hope we get into this in the Q&A, is that this entire trend must be resisted, and we can resist it. Fragility is resisting it through focused public interest litigation. We are resisting it through building a business chamber footprint around the country that is seeking to solve local solutions. We're working very intently in certain local municipalities. We're resisting state overreach and state creep in several areas. And I only highlight this to say that there needs to be a pushback. We can analyze this from outside and talk about where things are going, and that's important. But we also need to analyze it from the inside and say, what can be done to affect change? Elize spoke about some of the positives in the private sector. We need to continue to galvanize the private sector. We need to continue to galvanize business communities to kind of push back against these risks. Last point I'll make is, before I hand over to Claude, something we're talking about today, and Magnus raised it at the start, is the need to invest offshore. We must have that conversation. That's an important conversation. We mustn't forget, though, that in resisting state overreach and state failure domestically, getting some of your wealth offshore is important, but it's only one leg of the strategy. You can't sustainably resist state failure and state overreach if you don't hold on to some wealth domestically and use it to build institutions, to build solutions. And so let's have that balanced discussion later. I thank you very much for that. I'm going to hand over to Claude, and I hope we have a good Q&A later. Thank you. Claude, you're on mute.
All right, how's that now?
Perfect, thank you. Hello, Claude, welcome.
Hello, Magnus. Hello, everybody. I'm just going to share my screen. Tell me if you see it. How's that?
All good on our side, thank you.
Yeah, all good on your side. All right, so let's get going. Look, I'd like to say that to your numerous audiences, it's first, thank you for joining us. I think, if I'm not mistaken, Magnus, we had the idea a little while ago of doing something which would look at the prospects of some kind of sovereign crisis, and not necessarily a debt crisis, but a sovereign crisis which includes the currency value, inflation, confidence, interest rates, and obviously private and government debt. So I think it's important to reframe that what I'm going to be talking about is really South Africa's crisis through that. And Russell has spoken quite extensively about state performance and state failure, and this is really the focus that I am going to take in this conversation. And I would like to start by sharing with you that this is really my area of expertise, state performance. I currently advise the World Bank in Indonesia. I just completed a project in the reconstruction of the port of Beirut in Lebanon. I spent about 2 years on that project, and in a way failing to achieve anything in way of reconstructing a port, which is a vital infrastructure, because Lebanon is the epitome of state failure and state capture by elites who have a vested interest in the collapse of the economy. And I have worked in the DRC and Zimbabwe and Madagascar and Mali and Mauritania and in many other places, Azerbaijan and Georgia and the like. And so I know not just how state failure works in theory and how state failure works in data. And my colleagues have presented ample data, and I will be presenting another way to look at state performance and to have a conversation about what is a state and state failure. But when I was in Lebanon recently, I was walking through the empty streets of a neighborhood by the port, which was a grand development scheme by a man who then became prime minister, Rafik Hariri, and then was assassinated, which is an old area of West Beirut called Solidaire. And clever name. The whole point of Solidaire was to try to rebuild the area that had been completely destroyed by the civil war and to serve as a foundation for reconstruction. And it was somewhat successful, but it was founded on the wrong principles, and it was founded on real estate and construction and financialization of the economy. And it turned out to be a gigantic bubble, and that it did not create any sustainable foundation for A, the economy, and B, for state capacity creation. Because really, how an economy functions and how a society and a state function is really a matter of relationship between things like human capital and political legitimacy and ideology and infrastructure and economic performance and competitiveness. And you can't isolate these things. You cannot have a conversation about South Africa that is exclusively about the economy and on a technical basis without talking about politics. And you cannot talk about politics without talking about the underlying social constraints, the human capital, the social capital, the educational level, access to infrastructure, access to education, and so on and so forth. And the problem we have when we look at countries that are in the path of state failure or experiencing significant challenges in terms of state performance is that we apply our Western minds, we apply our Western frames of reference. So we have this kind of economistic determinism, which we've had for a very long time, but which we, and for good reason, but which we have assumed was the normal way of looking at the world. The kind of homo economicus perspective, the rational actor, the rational thinking, that everybody is aligned to creating a common good, a common society. And we've never really had, and South Africans suffer from that affliction because the South African state is a creation of Western colonialism in a completely different political cultural environment. But we can't simply be looking at economic data, and we can't externalize political factors, and we can't externalize sociological factors. And I really like what Russell said, is that, yeah, you have to think rationally as an economic actor. But if you think rationally as an economic actor and you put your money overseas, your rationalism at your level as an agent of your own money or an actor of your own money or a representative of your own money or custodian of your own money is potentially rational from a political standpoint. In the sense that indeed putting all your money out of South Africa becomes part of the self-fulfilling prophecy. And therefore, you can say, well, in Russia, I have no political agency. I have no choice but to pull all my money out or all my money in. And if I take my money out, maybe I have to take myself out because I have no voice in the political system. In South Africa, that's not the case. And I think That's perhaps the most important aspect of hope that I have for South Africa. And I don't really like to talk about hope. I don't really like to talk about hopelessness. Obviously, these are fundamental issues. But every time we talk about, or we present the state of the economy of the state of South Africa, you know, I've been labeled as darkly pessimistic. I've been labeled a bit like Magnus as, you know, even anti-South African. You know, that I should pack my bag and go home because someone is saying that I'm not from South Africa, or I don't belong there, or that, you know, I should put up or shut up. And I'm somewhat unpalatable even to big business organizations, because everybody's playing the political game. And the political game is that, well, we don't want to be on the wrong side of government. So it's very complex. And, but again, the type of political regime you have matters. And so when you make an informed economic decision, you have to think about the political implication it has on the society you are a member of. And here you know, we can go on and talk about layers of racism on all parts and blame and apartheid and all that, which doesn't get us very far. But the point is, wherever else you put your money, Russell said that you are going to be facing the reality that the world is in grave crisis, and that we are confronting the return of geopolitics for the big G, that the dream of the 1990s, that we would be in a world of forever globalization and integration and financialization, it proved, you know, as you anticipated it, because I'm a political scientist and an economist, proved to be a dangerous delusion. And I mean, I was just looking yesterday at the immigration numbers into Israel over the past 20 years. And you've seen continued immigration to Israel by European Israeli Jews and American Jews, South African Jews, who are friends of mine. Some of them are rushing out. This is the world we live in. It's a very dangerous world, and we should not discount the prospect that it's going to get a lot worse before it gets better. So, without further ado, I don't know if you guys know about Unomics, but maybe that's what we do. You know, my tagline has always been: the world is in disorder. Crisis and disruption emerge, spread and shape shift at accelerating speed, and current methods of anticipation and resolution of risk and disorder become less effective in the face of rising complexity. We need new models of analysis. So what we offer is a solution for the analysis, management, resolution of geopolitical and country risk at the level of firms, at the level of individuals, and at the level of countries. We work with both sides of the equation. Big corporates who invest in these operating environments and need to understand them objectively through data. So what you're looking at here is, I'm not trying to get you to read this, I'm just illustrating the fact that we have developed a very powerful model that comprises over 180 countries in the world, data going back to 2005, which measures state performance, because we say the following: country risk is the impact of state performance on whatever values or business or assets or objectives or strategies. So first, you need to measure state performance. Then you need to measure how that state performance impacts your business objectively in a data-centric way. Then you need to have a rational management plan together. Here you're looking at one way of positioning states on this graph. You're looking at economy, politics, society, fragility, and security. And I'll come back to you. I'll show you a couple of graphs about where South Africa was and where it's been. What's very important for you to understand is that this model we built at the request of capital-intensive businesses, principally mining and oil and gas, who, when they invest in a country, invest for 20, 30, 40 years. And therefore, they don't simply need the perspective of, well, we read the news, we spoke to a couple of politicians, and it's all going to be good. Or, oh, there's a new president, and this guy is going to take a different pathway. That works for 2, 3, 4, 5 years, but if you're in there for 20 years, 30 years, you need something much more robust. That's what we provide. So in 2016, we did a forecast for a big South African mining company that has become globalized since, in large part thanks to our forecast that South Africa was on the path to, by 2030 or so, being technically ranked a failed state. That was a very controversial finding. We followed the data, and the data told us where we were going. I must tell you, our class initially didn't like it because it didn't match the zeitgeist at the time, which was that, eventually, somehow, somewhere, someone's going to save South Africa. If Zuma goes, Ramaphosa may come and he will save South Africa. Big business may save South Africa, or the DA, an alliance with a new ANC will save South Africa, or Jesus will come down from the heavens and lo and behold, he will save South Africa. Because according to people in societies where they live, someone somehow is always going to save their very special country. Right? I'm French and Mauritian, and therefore my countries are going to be saved by Jesus is going to come down and save France and Mauritius, or South Africa, or the US, very special country in the eyes of the authorities. So what did we see? We saw we compared the South Africa's performance on these different measures, and then we forecasted using simple regressions. We used 3 scenarios on regression using different time frames. And what we saw is we expected this decline in South Africa, and we expected that by 2020, that's back in 2016, using 2015, 2020 data forecast, going back to 2005, we saw a couple forecast line, and we said, well, it's likely that South Africa will rank around 41st in the world in politics, 64th in economics, and 145th in the world in security. We were accurate by about 90%. SA by 2020 was ranking 3% better in economy than what we had forecasted. Isn't much, so we were pretty much on spot. As regard to economy, it fared worse by 10% than what we forecasted, 45th rank instead of 44th, 41st, and it ranked 14% better in security, 123rd instead of 140th. But I mean, really, it still puts it amongst the most violent and dangerous countries in the world. The greatest decline in South Africa's performance on all these metrics has been in the economy. So the economic decline has really been what has been leading, if you want, this progressive slide in state performance. We always scratch our head now. Understand we have a system of data where you have many different layers. You have 5 main indicators, and each of them have sub-indicators which recognize it. And what's very interesting about the political decline is that we've seen a significant decline in state capacity, in government capacity and government performance, policy quality, implementation of policy, capacity to implement policy, productivity of the public sector, efficacy of the public sector. But what we've seen is a significant resilience in civil society and democracy, freedom of expression, and the court system. So, if we take the political system data we have and we remove democracy and freedom of expression, then suddenly South Africa ranks much worse than what we have overall in terms of political performance. So that tells us again, we have to play with the strengths we have. And unfortunately, we have a government that seems intent on just about every aspect of policy to play on our weaknesses and destroy our strengths, sometimes by default, but very often by excess, in the sense that there is a deliberate policy of destroying what works and replacing it by things that don't work. And that's not just quote unquote stupidity or incompetence, although there is plenty of it, but there is also vested interest in state failure. And then I go back to my Lebanon example. I worked in Israel, I worked in Palestine, I worked in Jordan, and I have seen what it takes for a society to become captured by elites who are fundamentally predatory and will sacrifice the common good for their own good. And there is no doubt in my mind that this is where we are in South Africa, and that the only things that are holding government potentially to account, insufficiently so, but potentially to account, are those democratic institutions. And I think more than the institutions, the attachment, deep attachment that South Africans have collectively to freedom of expression and to the independence of the courts and the judiciary and freedom of the press. But these are very fragile, and we mustn't take them for granted. So government, so we have to separate, in our system, we distinguish very clearly state from government. The state is all of us. It's all of the institutions, it's the independent institutions, it's business, it's civil society, it's our infrastructure, it's our school systems, it's everything that makes our nation function. So it's the infrastructure, the superstructure, and the productive system, whether it's producing culture or goods or services. Government isn't the state. Government is an element of an attribute of the state. It's that part of the state that is in charge of formulating policy, implementing policy, and in some cases democratically, in some cases not so democratic. So it's very important to understand that you can have relatively functioning institutions and a failed government. And that's a very important understanding to have, because it affects how you address the problem. We're not talking about an overthrowing of the state here, right? We're talking about changes of government. That's fundamental, because the overall architecture of the state in South Africa is good, has one of the best constitutions in the world, has tremendous amount of capabilities and assets. Now, if we look forward, if we continue looking at what we have looked at for the past 10, 15 years, look at SA, and I'll rather show it here, is these two graphs. So if you look at the first graph on the left, what you will see is something very interesting. Here you're looking at no longer the ranking of South Africa in terms of what, where it ranks in terms of 180 countries, but in terms of percentile position. So since 2016, we've changed our methodology. We're looking at where do countries stand relative to each other on a 100% scale, percentage scale. And what's fascinating about South Africa, and is a very powerful perspective on why we are experiencing this state failure, is that if you look at South Africa's the circles in economy, politics, security, and society, is that in 2006, and it still is the case today, you had a state that performed relatively well in terms of economy and politics. So a relatively competitive economy in 2006 within a relatively democratic and functioning government, but with the societal performance and the security performance of a failed state. And that is directly the product of colonization and apartheid. where at democratization, you effectively have a dual state with a minority living in a functioning society that creates jobs and good livelihood, and a new democracy. So South Africa ranks very well in democracy, a new constitution. So it ranks very well there compared to other countries. It still has quite a competent bureaucracy. You know, from transition 1994 to, I would say, probably about 2009, 2010, 2011, where there's an acceleration in the transformation of the public sector. So it is at once a kind of first world, you know, an advanced emerging market, and at the other time, it is an underdeveloped country. And what we should have seen, the developmental project that the ANC should have embarked on, was to leverage the assets it had, this democracy, this functioning state, although it was not politically representative, but it was functioning, and this competitive economy, and to use that to pull back to the first quadrant, right? To pull what is on the top right of this graph down to the bottom left quadrant. Instead, what we saw was massive amount of effort in improving social outcomes without success, despite increasing expenditure, and in, well, improving security. I'm less convinced there's been a massive commitment to that. I think there's been criminal indifference by government on the state of insecurity, and obviously the initial HIV pandemic. But a state that clearly, a government that clearly has failed to create long-term sustainable social and human capital in an educated, safe, well-housed, productive population. And it has spent vast amounts of treasury doing this, pursuing that, while at the same time so becoming the world's largest welfare state per capita. And
sorry, Claude, can I just interrupt? We're going to run out of time in about 7 minutes. If I do apologize, if you might just wrap up, because we've got lots of questions.
Yes,
and
that's fine.
Another 2 or 3 minutes, Claude, then we have to go to questions.
Yeah, I can do that. That's very easy. So in essence, we can, you know, the developmental project of the ANC has abjectly failed. They have undermined the economy, and they have undermined the democracy they contributed to create it without generating positive results. And if you look at the outcome, which is the graph on the right, you will see that South Africa between 2006 and 2020 is one of the countries in the world that has experienced the fastest loss of rank, global rank, in the Fragile State Index. It was for a country of a particular income level, in 2006, it was the least fragile state in the world. And now it is on the regression line. It is as fragile as it is poor. And if the forecast is correct, which we anticipate it to be, by 2030, it will be far more fragile than it is poor. And that is an indictment in itself. So let's finish on the, you know, the fiscal view of that. So what we say here is that the developmental model of South Africa has failed. These are complex graphs, and feel free to contact me, and I can take people who want to through this. But in essence, what this tells us is that South Africa has one of the world's worst fiscal multiplier in the world. And in fact, it's a negative fiscal multiplier. The more government spends, the less we have grown, okay? And the lower we have in terms of fixed capital formation. And we've had utter failure in our infrastructure system. So government, and my colleagues have said, say government spends more and more, and it spends this worse and worse without ever delivering the kind of growth that you would see in governments who, for the same amount of money, like Indonesia and Philippines and India, would deliver vastly greater amounts of growth than South Africa has. So the developmental state model has failed. The state itself in general is failing. But the problem is that the political system hasn't caught up with that. We are in a very dangerous situation because we have elections coming up, a government which is fundamentally non-functioning, both in terms of policy and implementation capacity, as well as in terms of ideology. And we have now elections where there is a strong likelihood that this government will lose majority, but there is also a very strong likelihood that it will ally with even more radical factions, and that we should really consider the possibility, and I would say it's more than a 50% chance, that we end up next year with a populist government who says things like, well, we need to do the people monetary theory. We need to nationalize the Reserve Bank so that we can free up the amount of money that is available in this country so that we can achieve all our development goals. Because the fault, and we're hearing it already, is that the problem isn't with the economy, or the problem isn't with policy. The problem is with the fact that we're not creating enough money to achieve the things we want to achieve. Kind of Zimbabwe scenario.
Claude, we have to leave it at that. I'm very, very sorry about the time. We booked for 90 minutes. We've got about 4 minutes. A heck of a lot of questions coming through, and a lot of people are saying, you know, what must we do? That is the big question to protect ourselves. And we've had very interesting, you know, Russell raised some issues. You know, we cannot just externalize all our assets. That's not what we're saying. We're saying that there are ways to protect your wealth. And I'll just to end up, there are a lot of questions coming through, and I'll try and answer them individually. But let's just look at what are the options for ordinary investors. And I hear the arguments from Russell that, you know, we still would like to build our economy and so on. But remember, we're in the investment business. We need to advise people and their families about their personal objectives. And I've learned one thing after being in this business for 40 years, that money is deeply, deeply personal to most people. Very few people will say, I'm going to sacrifice my economic returns for the country or for the community or whatever. I mean, that might happen for the very wealthy people, but most people have a nest egg, they need to protect it. Let me just run through a couple of, you know, examples. And bearing in mind, you know, this is not investment advice, it's just some commentary. You need to talk to one of our advisors countrywide. And by the way, we've got 25 advisors. We've just opened an office in George. So we have 9 offices countrywide. So make contact with anybody from Brent's Wealth. But let me give you an example. There's lots of what I call debt capital that people have in certain types of retirement funds, retirement annuities, preservation funds that have performed abysmally for 15 years. There's been no growth on these products virtually in real terms. And there's an obvious starting point. If you're older than 55, our advice has been for many, many years, take it out, cash out the cash portion, and reinvest into an offshore asset swap. There's a prime example of what you can do to protect yourself. Secondly, gold, physical gold has been a very good protection. Whatever government does or doesn't do, gold, the performance of gold has been untouched by at least the ANC. Thirdly, you can consider local asset swaps, swapping your very poorly performing local equity funds into offshore equity funds. It doesn't leave the country, so the money is still in the country. And then lastly, you do have your traditional offshore avenues, which is the 1 million rand per year, single discretionary allowance. And if you're fortunate to have some more money, the 10 million rand per year, which is now called the authorized international transfer, which has become very much more complicated to take. But this is a discussion that you need to have with a financial advisor. what can I do to protect myself? And surprisingly, there's a lot you can do. And I've got some questions coming through on Bitcoin. I'm not going to comment on Bitcoin, but it could be a part of that overall portion. But I'd like to say thank you very much to our audience here today. We are running out of time. Russell, very nice listening to you after reading all your stuff for many years. Elize, baie dankie vir jou tyd vanmiddag. It's nice to see you. And Claude, all the way in France, I would have loved to have listened to more of your stuff, but it was very compelling, some of the deep work that you've done over the years. I'd like to thank our audience for listening, all our guests and clients and potential clients. I'd like to say thank you very much. And also to our Dalian van Wyk and Sue Heystek, who put together this webinar. Always a lot of work in the background. Thank you very much. And we invite everybody, if you want some questions, have a look at our website, make an appointment with one of the officers and just go and chat to see what can I do. There's a lot you can do. I personally have been recommending offshore externalization for many clients, and they are deeply grateful considering the current environment. And from that, I say goodbye and good luck to the Bokke. And I've got my shirt so you can see. Good luck to the Bokke against the Engels on I think it's on Saturday or Sunday. Goodbye, everybody. Cheerio.
Cheers and go Bokke.